Okay, so I think we are recording now. Great, let me share my screen. Okay, so we'll start now. Good afternoon, everyone, and welcome to the 5th event of our Impact Investor Circle series, which was launched in November last year under the theme Improving Access to Capital for Micro, Small and Medium-Sized Enterprises in Africa, with a general and specific focus on Zambia. Zambia, as some of you might know, is aspiring to become a regional impact investment hub through the work that we are doing in the National Advisory Board for Impact Investing in Zambia, with financial support from Prospero Zambia and technical advisory services from the Global Steering Group for Impact Investing. As usual, we have a lot of ground to cover over the next 1 hour and 20 minutes. Let me start by thanking all of the attendees who have zoomed in today. I'm particularly happy to announce that we again have reached our target of having almost 100 people registered to attend today. For those of you who are unable to join a live session, you'll be able to watch the recording once it has been uploaded on the 4IP YouTube channel before the end of this week. Let me quickly present the house rules. Please turn off your microphones whenever you're not speaking throughout the entire event, in order not to disturb the speakers as well as the listeners. And please do feel free to use the chat box to raise questions, so that those questions we can't answer due to time constraint can be addressed after the event, either by email, or we're also happy to set up bilateral calls depending on the nature of the questions or comment being raised. And last but not least, remember to identify yourself and your organization if and when you ask any questions. Okay, so the agenda today. Today, basically what we are talking about during this Impact Investor series is how to get private impact capital to micro, small and medium-sized enterprises operating in Africa, especially those like Good Nature Agro, with a potential and vision for growth, not only in Zambia, but also taking advantage of the new African Continental Free Trade Agreement. These growth-oriented micro and small and medium-sized enterprises are typically seeking financing ranging from 20K, as we have explored previously with Challenges Zambia, as well as Development Finance Associates, up to and beyond $2 million, as we will explore in today's webinar. Our objective is that this Impact Investor Circle can stimulate increased collaboration amongst non-traditional social investment partners and lead to the adoption of innovative finance approaches that would contribute to the overall mobilization of private impact capital from the 250 trillion global private capital markets to finance the SDGs between now and 2030. And to do so, present African impact investing opportunities to OECD-based impact investors. So as you can see on the screen, the agenda is as follows. Next, my colleague, Mrs. Denise Erkus from the Swiss Impact Investing Advisory Board, will say a few words about her new exciting venture capital fund called Prados Fund 1, which will be investing in sustainable agricultural startups in sub-Saharan Africa. After her presentation, my colleague from Impactpreneurs Africa Limited, Mrs. Unique Piri, will, in addition to presenting the strategic objective of IPA, also say a few words about the Zambian Young Emerging Farmers Network, which he founded. The core part of today's program covers two related parts. During the first part of our event, we will take you through the entire process of the recent Good Nature Agro Goodwill investment deal, from the origination to deal signing. Mr. Sunday Silongwe Jr. will present the investee perspective. Mrs. Mercy Suli-Hume will present the impact investor perspective. And Mr. Simonsa Muyangana will present the role of the intermediary in matching the two parties of an impact investing deal. The second part focuses on the overall impact investor climate in Zambia, and the session will be moderated by Mr. Hagai Chumba from the National Advisory Board for Impact Investing in Zambia. He will be interviewing the same protagonist that featured in the first part. And finally, my colleague, Mr. Simone Querki, will conclude and introduce next month's event. In order to capture and disseminate more widely the key takeaways from this event, we have decided to record all episodes of this series. So with this introduction, I'll hand over to Mrs. Erkus. Over to you, Denise.
Thank you very much, Christian. So first, I want to say a few sentences about the Swiss Impact Investing Association. Now you will see more and more activities from our side in terms of the membership values and presentation and the events, in fact, on the YouTube, and interviews with the thought leaders and those who are investing or invested in the impact investment world as well. So I'm in the advisory board of SIIA, and we want to make SIIA global, international known, and make an impact actually on this area to the world. So this is one part. My heart is involved. And the second is the Prudhoe Impact Capital. So the name of the fund is Prudhoe 1, which is going to be registered in Luxembourg. To give a bit background, I worked in the investment funds business since '92, from Turkey to Luxembourg to Dubai, and now in Switzerland. And it was always my intention to have a fund where I can actually create with a good team and make an impact. So this is Prudhoe, which means manifestation as a word. And our objective is to invest in sub-Saharan Africa on the renewable energy, but climate smart energy and climate smart agriculture, meaning that the opportunities we are looking and investigating at the moment put together the innovation, technology, and agriculture energy to make a positive impact to the lives of people. And we work with Oxford in London on the impact measurement methodology, because we want to really have a very solid system to measure impact return, as well as the financial return from the structure. And the choices for the portfolio pipeline is based on investing partly seed, partly Series A, and partly Series B level to give a balanced, diversified portfolio in terms of risk to the investors. And we will work directly with those companies that we invest to mentor them and to grow them, not only on the capital raising support, but also on the operations for the business development, so that the valuation of the company when the exit comes is also very acceptable and satisfactory for our investors. And as I mentioned, is the climate smart agriculture and energy is important for us. This is one of the main objectives. And that's the way we can create also impact to region, to Africa. And the 4 ideas now, to summarize the fund, I don't know how much time I have. So Christian, you tell me if I'm going beyond the 5 minutes. Is the early engagement in those companies and being engaged with them, not because we are in Switzerland and London, we are going to be on site with the teams there, with local partners, because they know the market. We will work with them and with the same objective, with as a co-creation for those companies for growth in their businesses. And with the impact measurement concept, we will create this impact return that our investors are looking for. We believe that there is the market opportunity, and we are investigating those opportunities. And our team now, we put, you see there is myself, Denise, and Antonio Potenza. He's in London. As well as Bethany. They have the education on impact from Oxford, and they are teaching at the moment. And we have also additional people that in the team that we are searching with our network, the potential investments in those regions that fits into our criteria. And I work with Antonio on the structure of the fund, what is the best structure with the experts in Luxembourg. And at the same time, we are creating the platform for potential investors because we want to talk to them first. We want to co-create with them to create an investable and then the balanced portfolio that is satisfying their needs and their expectations from such a fund. So maybe I can share afterwards my contact details in case you have any other questions. You want to know more about the fund, then I can go through that in more detail. It is initial stages, so we don't have yet the really pitch stage for the investors. We just want to be ready with our pipeline, with our structure to be ready to go in Luxembourg, and have some discussions already with the investors, on seeing what they would expect from such a fund. A discussion, we call it co-creation. We want to create something that is going to fit them so that they can join us afterwards in a few months. So do I have more time, or I'm good?
No, thank you very much, Denise.
Yes,
this is great. Thanks a lot. And I'm sure that our Zambian listeners, given the fact that renewable energy and agriculture is two of Zambia's most promising business sectors, so I'm sure they're very excited about the new venture capital fund moving into this space. So some of those potential future investees of your fund, Denise, will be represented by my colleague, Mrs. Unique Piri. So Unique, over to you.
Thank you, Christian. I don't even know which hats to wear first, whether to do the IPA hat or the Amicus hat or the Zambia Young Emerging Farmers Association hat. First and foremost, for those that have been watching our YouTube videos, Impactpreneurs Africa is an impact advisory firm, really whose objective is to address issues of sustainability. And we do that by offering support to the impact investment ecosystem players through technical assistance and capacity building. Our core strategic actions and activities include promoting impact investment awareness in the SADC region. We've been able to do that by working with various organizations such as We Create and the Zambia Association of Manufacturers, and by also conducting impact investor circles such as these. Our second objective also is to mainstream impact measurement and management in SADC region, basically starting with Zambia. We do that by provision of impact analysis measurement and reporting to enterprises, and also developing enterprises impact strategies and profiling the best practice impact analysis and case studies of impact enterprises in Zambia and SADC, and thereby identifying an impact enterprise from non-impact. Our third strategic objective is to raise and facilitate the impact capital here in Zambia, and we've been doing that through the development of impact pipeline by holding collaborative talks with challenges towards the development of early stage impact fund. Our fourth objective is to undertake ad hoc research and consultancies, to promote knowledge and development by building a roster of consulting firms. And, we do that by collaborating with institutions such as IPA, SIIA, where we've carried out impact assessment for, on their behalf. And this turns out, very well for investors who want to come in on board. In terms of the organization, the Zambian Emerging Farmers Association really was created to to develop young emerging farmers by empowering them with capabilities, business leadership, and life skills through development facilitation in the agriculture sector. So we have young people who are in various value chains spread out all across the country who are part of these organizations. It's a youth-driven non-governmental organization that is here really to drive the agriculture agenda. And we've been doing that by holding collaborative talks with various institutions, such as the Agriculture Training and Knowledge Center in Chisamba. We're also parts of the Zambia National Farmers Union here in Zambia, and other organizations in the agriculture sector. That's all I can say about SIIA. In terms of the company that I run, it's a horticulture company, horticulture and livestock company called Amicus Zambia. It was established about 10 years ago. We started with fresh fruits and vegetables, but through some of the challenges that we were facing in terms of storage and access to funding opportunities, we've sort of diversified into the legumes value chain. We're now focusing on producing beans, which we're packaging and reselling to retail stores here in Lusaka, and hoping to spread across all parts of the country. I think that's about it, Christian.
Thank you so much, Unike. That was very good and very interesting, and great to see the kind of work that you are doing in Zambia. So with this introduction, we move to the core part of today's event. Basically, what we are trying to do here is to explain a very interesting transaction that took place last year. So generally, there is a consensus among respondents to a recent impact investor survey that there is need for better communication on what impact businesses are, so that they are better positioned for impact capital, and to ensure that impact strategy is embedded in their core business operations. In November 2020, Good Nature Agro raised $2.1 million in a Series A, led by Goodwill Investment, with participation from existing investors such as Global Partnership and Finca Ventures. For the for-profit social enterprise that specialize in legume value chains, will use the funds to hasten their processing infrastructure in Central and Eastern Zambia, grow their full farm extension services for smallholders, and connect farmers to large-scale agribusinesses and food processors seeking sourcing, as well as to further their seed breeding program. This is the company's first disclosed deal since it was founded in 2014. We will use this case study to do a diagnostic of the whole process from the deal origination to the execution, which typically takes 3 to 12 months. This will allow the participants to find answers to the following questions. So we'll start with these phases here. So we'll start with Good Nature, represented by Mr. Sunday. Today, Good Nature is a for-profit, socially conscious company that links 5,200 small-scale Zambian farmers to the lucrative and high-impact market of legume seeds under their brands, Good Nature Seeds. What was the basis for the business generating the business idea, and how did you move from the idea to the startup to the expansion phase, where you are now, in a few words? Sunday, over to you.
Good one. Thanks, Christian, and thank you, everybody. It's very hard to summarize everything, but it's always nice to talk about the story. First of all, I'm Zambian, and I love anything to do with Zambian small-scale farmers. I think we're in a country that's really endowed with a lot of natural resources, and it's quite arable. But I think if you have been to Zambia and you've been looking at the sort of the small-scale farmer profile, you realize that those small-scale farmers are part of the poorest of the poor, and they're really affected. So growing up in that environment, I sort of gathered up an impetus to make sure that these farmers can really get the best out of their farming. And in so doing, basically, I generated an idea with a colleague of mine, and we came up with Good Nature Agro. He's from the US, Zambia, on a visit. We met at a design summit, and we've basically looked at championing the small-scale farmers. So since they're impoverished, our mission has been from the get-go to move them from poverty basically into the middle class. And we do this using legume seed. So we started with legume seed production, and we've just looked at how we can grow that value chain. So legumes being crops that mostly grow in pods. So these could be beans, cowpeas, soybeans, groundnuts, you name it. So those are some of the crops that are on our profile. And they basically do much, much better than the monocrop, which is maize. I think a lot of African countries now have gotten maize as their main staple crop. But the margins basically on that, and also the what remains with the farmers is so low, such that you can generate more incomes from legumes. So basically, it's 3x of what legumes can do from what the normal monocrop of maize can do. So that's what basically generated that interest, and we saw that it's a model that can be scaled up from basically a group of 40 in 2014 to close to about 6,000 this 2020. So it's something that I'm really backing from the get-go. It comes from the heart with passion, with a good team like ours. And yeah, that's pretty much it.
Okay, thank you very much, Sunday. Simons, I hope you're with us now. So Bongo Hive is Zambia's first technology and innovation hub. Bongo Hive assists scalable startups of any background by enhancing skills, accelerating growth, and strengthening networks, increasing collaboration, and providing a forum for ideas exchange, reducing the barriers for entrepreneurship. What role do Bongo Hive play in general in supporting these four phases that Sunday has just described for us?
Great, thank you very much for that question, Christian, and good evening to everybody. At Bongo Hive, we work with great minds building viable solutions that will change the world. And the great minds that I speak of are the various people that meet at the nexus, and we provide a nexus meeting point for various people to then work together on building these viable solutions. And these include the creatives or the entrepreneurs themselves that think of that are bothered by the solution and actually think about what they can do to address it, to address the problem. The experts that might have deep knowledge that is beneficial to the entrepreneurs as they navigate their way to producing this solution, mentors and investors that then come alongside these entrepreneurs to help them grow from idea stage to a company that is investor ready in that process. But in order to be able to do this, the structure of hubs like Bongo Hive allow a number of things there, allow for a number of things to take place and to, in support of such an environment that allows ideas to not only be germinated, people to then co-create, but then work through the process of coming up with a business model that actually not only delivers value towards a paying customer, but also then in the case of what a company like Good Nature Agro is doing, is providing an impact that it's the community or the planet as is in this extent. And things we do is provide, for example, providing an environment where people can come to meet, collaborate, talk to one another, and participate in sessions that they can have conversations around. Training that we provide through programs at various stages of growth, whether it's incubation, acceleration, idea, validation, investment readiness, and other supporting workshops that provide for the knowledge that, especially first-time founders and other people building businesses, the knowledge that they seek to know that actually help them to get this right. And then also it's just the open interactions that they get to have with other people within the community, like I mentioned, whether it's investors, other startups that they are holding that they're on the journey with, partners that they can collaborate with in order to deliver the solutions towards the market, and other people that they would then get involved with. With the case of like Good Nature Agro, Although Good Nature Agro did not participate in a program that was initiated or run by Boma Hive, but Good Nature Agro fits in within the ambit of members of the larger community of businesses and startups that meet with each other and use the infrastructure that we have to either share knowledge, exchange, and get to meet one another. So I believe we met Sunday initially during the digital, there was the design summit that you mentioned, Carl and Sunday, when they were coming up with the idea for Good Nature Agro. Met them later on when they came together, and we offered them a platform where they could come and give a talk, and a lot of startups come to do that, to exchange their learnings, what their discoveries are, or what they believe the potential could be. We provide platforms for them to sit on panels and other things like that. So during that process, we developed a relationship alongside Good Nature Agro and have been keen fans or supporters of the growth as it has gone on. They also become personal friends with them as founders, just as we have with various founders that have either gone through our program, so that we have met in this instance. And so when it comes to the conversation that we're having today, it's the connection with investors is something that continues to be work that we get to do, and it's a balancing act for it's an act on both sides of a platform like ours, in that we meet investors looking for deal flow, and we meet good founders that are building companies that match the needs for accelerated growth that capital that they could benefit with, if the right capital was provided to them to get to the targets and the milestones that they have laid out. And in this case, we happen to know both Goodwill Investments through Mercy, who spent a considerable amount of time working when she was stationed in Zambia, working from our co-working space here at Boma Hive. And we knew Good Nature Agro. So the introduction it wasn't something to spend a night thinking through. It just happened to make sense when they asked, matched in our minds from both of them.
Okay, we'll get to that in the next slide. Let's move to the next phase. So basically, thank you very much, Simone. So Good Nature, again, tell us a bit about the preparation of the teaser and the process of finding the right impact investor. What methods or channels did you use?
Sounds good. Thank you so much, Christian. Again, I've just switched off my video, if you guys don't mind.
No problem.
Because I think I'm in a bit of a bandwidth issue here. So basically, we realized that we needed to expand, we needed to grow, we needed to make sure that even our processing capacity was up to speed. So we were looking for the right partner, and in the past we've raised small amounts of capital, basically in different forms, and we've managed to basically go through with growing the company. So that's last year was our 6th year of operations, and going to the 7th this year. So that meant we had a lot of traction. We had gathered a lot of learnings, and it was good enough also to prepare a good team. So in the search for investors, we basically reached out to multiple networks, including those that had already invested in us as angel investors, and also some investment networks that we knew. And I think one of the things that you'd love, I think, putting us on this call is that Simunza is actually the person that led us to Goodwill. And everything from there basically turned out pretty well. We've gone through a number of accelerator programs. One of them was a big one called Mass Challenge in the US, which we attended. So we had been briefed a lot about how to prepare ourselves basically to be investor ready. And on top of that, we had also worked with 2 partnerships, one that was spearheaded by Prospero to basically get all our ducks in a row, basically our paperwork or accounting. And another one was done by Open Capital Associates, which is a Kenyan firm, Open Capital Advisors. So that left us with a lot to do, but also a lot to learn and appreciate and make sure that our process in getting our paperwork ready was done. So by the time that we were facing a lot of investors and basically choosing, it was easy. choosing the investor, well, it's a it's a dating situation. We've been through a lot of conversations, but I think with everybody, one thing that we appreciate is that the investors that look at impact investing, especially in Africa, do really make it easy if they have somebody on their board that understands the African climate. And it was a basic given when we had Messi on board, but we also had people that had lived and worked within the African sphere. There are multiple investors that we knocked on the doors basically and spent a lot of time trying to justify our location, trying to justify our situation, and also the kind of farmer profile, because it's not the same everywhere else in the world. So it actually becomes easy if you narrow it down to people that have perspectives that match your needs. So that's pretty much it there, unless there's anything else that you want me to clarify.
Yeah, thank you. Thanks a lot, Sunday. Going back to you, Simonsa, please tell us about how you work with both impact investors and impact enterprise to facilitate the right matchmaking. You started to allude to that during your first answer. And how did you know Good Nature Agro and Goodwill Investment? Simonsa, the question was to you. Yeah.
Yes, my mic is stuck.
We can hear you now. Not so good, but if you speak closer to the
Can you
mic.
hear me? All right, great. Then that's good.
Sorry, you're on mute, Simonsa. If you can just get it back on. Oh, you're still on mute. Now the mute is gone. Go ahead.
Thank you. All right, so apologies for that. So back to the question that you asked is, what is the process of matching mentors for me? What we've learned over time is that getting the startups or the companies and the investors to speak the same language, we assume that that is something that is very obvious, but we've learned over time that there's almost a chasm sometimes there in expectations from both ends as to what actually makes sense for both of them. So clearly, a fund or an investor has criteria that they're looking for that matches the mandate that they've gone out with to seeking companies that meet the purposes for them to be able to make a return on the fund that they're deploying capital out of. Whilst on the other end, with the companies themselves have clear needs that they have to get to the next milestones and goals that they want to get to. And to do this, what we do is we first of all try to figure out, when we listen to both sides, is we first of all ask ourselves the question: what is the fund looking for? What is the fund willing to invest? So how much are they willing to put into a company? And what are the other criteria that they're looking at when they're considering a company? Then on the company side is if they first of all, for example, work in a sector, do they have the impact values that a fund would be looking for? Then is to then work out what are the different components of that company's journey that have matured to a level that the fund might be willing to then entertain a conversation with them. And Sunday, for example, gave a question around, okay, great. Is there a team that, for example, can get towards the milestones that this company says that it wants to get to? So if they're raising a round of $500,000, $1 million, $2 million, what do they hope to achieve once that money is deployed into their business? And have they got the team that will be able to, or do they know who they need to include on the team to be able to get to that target? And them being able to explain what that target is and what that vision is, and the value proposition that actually gets them to say that customers will actually respond to the next steps that they want to take, which then leads towards growth and hopefully then a return on the money that is invested, then starts to communicate something which hopefully investors will understand. So our position in that place is then to either play translator between these two, or work with the startup to be able to then, which is very often the case, is work with the startup during an investor readiness program to then get to a place where they can communicate this articulately to the investor. And this has been good learning for us as we're in the process, for example, of raising our own fund. And having learned what this process is with the companies has given us an insight into how a fund would work well alongside entrepreneurs that we work with.
Okay, thank you very much, Simota. So now we are bidding welcome to our third panelist. This is Mrs. Sulhume. Goodwill is an impact investment and advisory firm focused on financial inclusion and sustainable development. Goodwill invests in early stage equity in Africa, India, and offers advisory services worldwide. Mercy, what is your or Goodwill's preferred capital structure in terms of equity, debt, or mezzanine? What is your preferred target company size, small, medium, or large? And what, in terms of investment size, are your sweet spots? For example, what is the average deal size of Goodwill? And what are your key filters in screening the many teasers, I suppose, you receive on a weekly basis? And do you only do direct investment, or do you also invest in both funds and businesses? And what is the ratio between teasers received and a decision to actually meet the investment management team of a prospective investee? And what are your main challenges of sourcing and receiving, in terms of receiving teasers or attending pitching events, or receiving market information from intermediaries such as Bongo Hive?
Wow. Okay, let's hope that I've written all those down and I can remember them. If not, please do remind me. Yeah. Thank you, Christian, and good evening, everybody. So in terms of instruments, we're an early stage fund that's focused on sub-Saharan Africa, as you said, and we do direct equity. But since we invest in early stage companies, we work with what the stage of business that they're at and what their requirements are in terms of funding. So we can do convertible notes as well, but with the objective of converting into equity. So we don't do debt, even though we work with other players in the ecosystem to provide that kind of support to our investments, our portfolio companies, or companies that reach out to us and that we can't invest in, but we know that we have a colleague in the ecosystem that provides debt. So to summarize, Christian, direct equity, and we can do convertible notes as well. In terms of sizes, again, pointing at early stage, we're looking at a minimum of $500,000, so $500,000 or euros, to about 5 million in follow-ons. So when we invest, we can do ticket sizes of up to 2 million, 500,000 to 2 million. But we are committed in that we'll keep on investing up to a cap of about 5 million in a particular portfolio investment. In terms of screening, we do have a mandate by which we screen by, as every investment fund. So when an entrepreneur approaches us, I think I always encourage entrepreneurs to really understand what the fund mandate is before they approach an investor, to see if they fit that criteria. And we look at businesses that are within the sectors that we look at. So those are impact sectors. How we designed or came up with these impact sectors is we looked at the key sectors that a household in sub-Saharan Africa spends their money on. So what do they most spend their money on? They spend their money on food, they spend their money on education, on electricity, health. And at the foundation of that is financial inclusion. They need a robust foundation of financial inclusion in order to even spend money. So the sector focus is important. Also, that's important for our fund mandate is serving the underserved or unserved. We are an impact fund. So every business model has to be tied to either providing access to affordable goods and services and really lifting livelihoods. In the case of Good Nature Agro, they're linked to smallholder farmers, and connecting those market linkages and really empowering smallholder farmers was very attractive to us. In addition, there needs to be that social, social and environmental impact connected to the underserved. So again, an impact fund. So we're looking for either value that's being generated on the social side or the environmental side, or both. Again, in the case of Good Nature Agro, they were hitting the nail on both ends, with their link to the farmers on the social side, the link to the farming communities. And then on the other end, legumes being very environmentally friendly as well, and climate smart was also very attractive for us. We look at geography. We only invest, Sunday alluded to that earlier, we only invest where we have teams on the ground who understand the context, who have local networks. And so, the entrepreneurs or companies approaching us need to be in the geographies that we are active, and we have an active team on the ground. Stage of financing, early stage, post-revenue, we also look at the team. I think both Sunday and Simunza pointed to a team, so a strong team. If you say you're an agriculture company, we want to see a team that reflects that will give us confidence that you're able to execute. And finally, we look at scale. We want to know that you can scale. So for markets such as South Africa, Kenya, Nigeria, it's fine, if you have a strategy as a company to capture the market within those countries, because there's a huge market size there. But if you're from a country like Zambia, we would be looking at a company that has ambitions to scale within the region and really service customers across the region or across Africa or even across the continent. In terms of direct funds, no, we do not invest in direct funds. So we only invest in companies. And then the ratio of teasers versus what trickles down to an actual investment, that one is difficult to say. I'll give you, we get 1,000 applications per quarter. I think 1,000 per quarter, yes, if I'm not mistaken. So that's about roughly 4,000 to 5,000 a year of applicants coming through our email. That's excluding the applications that we leverage through our networks. Through entrepreneur support organizations like Bongo Hive, through other investors. So it's very difficult to say what ratio. I don't think we've ever really calculated, said what ratio do we get versus what we receive. But it's a very cutthroat, and I think cutthroat market, and we have to be extremely selective. So not a lot of investments trickle down from that 1,000 or 4,000 plus to actual investments. In terms of sourcing challenges, I think it comes down to what Simunza, a bit of the first of not really understanding, what we're looking for and whether we can invest in a company. So we may receive that 4,000 plus applicants or deals, but if they're not a match at the basics deal screening, then it's a no-go from us. The second is we might find a good investment and maybe proceed to do a due diligence and then find that there's certain governance structures missing, like perhaps no annual financial statements, etc. And we can't really progress with that because even though we come in early, they're a basic minimum of what we require in order to progress a deal. So I think those are the questions that you asked. If there's anything that I missed.
That was very insightful. So I just have one more follow-up question. So after that also tells you a lot about the company that we have in question, Good Nature Agro, coming through this cutthroat competition. So please tell us about the first meeting that you had with Good Nature. How did it come about?
So it was very interesting. I had already, I was in the Zambian ecosystem because when we decided to look at the Zambian market very actively, I had spent some time in Zambia for a number of months, and I was, sitting at Bongo Hive. Bongo Hive were very lovely to welcome me. And throughout that time, I had already interacted with Simunza and given a criteria of what we were looking for in terms of businesses. We had already mapped out the ecosystem of where we thought the opportunities would be. As you so rightly put, agriculture and energy are really at the top of the Zambia's ecosystem. So I think it was almost organic or natural that the introductions came into play quite earlier on. Initially, when we were introduced, I remember that Good Nature had not yet launched their Series A fundraising round. But as an approach for our firm, we do like to keep that relationship warm, to continue to connect with the entrepreneur, to continue to monitor the business, and as it grows, that's very important for us because this is a long-term relationship. We do patient capital that's over a 5 to 10-year horizon. So it's really important for us to get along with the entrepreneur and to really feel convicted by the entrepreneurs. And so during that period from the initial contact, we didn't go straight into investment. There was a bit of time of engagement And it was almost amazing. Sunday will tell you that at the same time, I think both Sunday and his co-founder Carl had traveled to Kenya, so they got to interact with our Kenyan colleagues as well at the same time. So just as we were, interacting with them, getting to know them better, I think they were also getting to know us better, which is an important point that I like to give to entrepreneurs as well. Is just as much as the investors doing due diligence on you, you need to be able to do due diligence on that investor to ensure that it's not just the capital you're getting, but other value adds, as well as, is this a type of person that you can have conversations with, not just when things are going great, but when things are, not going as planned. And I think it's very important to determine that through the engagement.
Yeah. And as I say, it takes two to tango. So Sunday, could you just tell us very briefly about the first meeting from your perspective? How did that come about?
Sure, sounds good. I think much has already been said by Messi, but I think it was nice to say. I think besides thinking of investors as just a class of people that you can talk to for money, you have to get to know the people behind it, like Messi said. You have to know their personalities. I think one of the things that we were really excited about Goodwill is that they really have a good team, not just Messi, but everybody else on board. They are really supportive. They try to get to know you more beyond just the work that you have. So they get a little bit, I wouldn't choose personal in the sense that it borders privacy, but in the sense that, they want to know more about what you do, what your ambitions are, what your aspirations are. And that was quite exciting. So the first time I think we physically met Messi was actually at one of the platforms called ICA. And we had been talking before that. We talked on phone and we talked on email. But we had a meetup and basically talked about what we do. And in most ways, I think being a startup, you would want to sort of pitch away as much as possible what you have. Like Messi said, we were not raising at the time, but we had that thought in our horizon. So we're really trying to put ourselves out there. But the truth out of the conversation is that we also were learning more from their side, and there was a lot to appreciate in the process. But basically, the main aim is to have somebody into a pipeline and making sure that they're the right fit. You've got to know basically who you're going to bed with if it comes to that. But one exciting thing is that they really have a great team and they really have a good strategy behind what they do. And to add on top of that, we, like Messi mentioned, we were in Kenya, we met their team, which was very invested in understanding the agricultural climate for Zambia and also just for Southern Africa. And they were really welcoming. They taught us a lot about how Goodwill invests and how basically they've been working in different parts of their portfolio. So that's exciting. So for me, that is one thing. I think the highlight is that you have to go beyond just pitching your investment. You have to get to know what the investor is about. You have to really understand their profile. And same thing for the entrepreneur. You really have to put yourself out there, talk about reality, and make sure that they understand. And when it comes to the investment, it becomes easier also to sort of tell your story and get them to see what you have. You open up your room and basically see, they get to see and get to know you.
Okay, great. Thanks a lot. So meeting for the first time is, of course, just the beginning of a very long journey. So let's go on to the next stages. Going back to Goodwill, did you visit the production site or did you watch the nice videos which they have produced of the company? Very briefly, Mercy, just.
Yes, so we were very blessed in that we visited as part of our due diligence, we do 3 parts. We do desk research, which is, sources, internal sources from the company and external sources. We do interviews and we have to do a site visit. And particularly important for agriculture, which also has ENS issues or ENS matters. So we were privileged to travel to Zambia. The managing partners and I and another colleague traveled to Zambia just before COVID hit, and to Chipata, Zambia, to see for ourselves what was happening. I think that it's very difficult sometimes to understand a model and the way things work theoretically. You definitely have to go on the ground and see it for yourself.
Yeah. how many days do you on average spend calculating financial returns, carrying out sensitivity analysis, stress tests? And is there any difference between an investment of, you said, $500,000 versus an investment of $2 to $5 million? Briefly again.
Well, it also depends, really. It depends on the financial model. It depends on the complexities of the business. Looking at financials can take anywhere from a couple of weeks to maybe a month or two, because sometimes you really have to understand the underlying assumptions. It depends on how complex the business model is. So simpler, straightforward business models that we've had a lot of experience in would take shorter amount of time. And in geographies where we've made investments and we're very comfortable. And then as you start to go into sectors or different geographies that you haven't, it takes, or more complex business model, it may take even a month or two, depending.
Okay.
And sorry, Christian, there's also a lot of there's also definitely in that process, a lot of back and forth to understand.
Yeah. Sure. What are the key variables or the key determinants in negotiating the deal price? And also, if I can add, so you can answer both questions in the same answer. What are the key considerations behind the deal structure that you need to take?
Okay, so I'll start with the first one and then go into the second one. In every deal structure, I think there are three key things, and also for the entrepreneurs, I think investors are more conversant with these type of things, but for entrepreneurs, there are three key things. Is the economics of the deal, which is where the valuation comes in, and there'll be a lot of time spent there. And then there'll be control and governance terms. So those are the three kind of, the structuring will be centered around those three. In terms of negotiations, Christian, can you go back to your question around the price? Sorry.
Well, what are the key determinants behind the negotiating the deal price?
Okay, so we usually look at the sector, the stage, the geography, and then for earlier stage investments, it's very difficult to do a DCF. That doesn't work because there are no positive cash flows to do DCF on. So a very common method is using comparables, having access to comparables, and for that you need information on sector, and then you sector, stage of business, and then you obviously discount according to which geography that you're at. So those are kind of the key determinants of giving a price, and then you present that to the company, and there's a little bit of negotiation that takes place. Yeah.
Sorry, Miss, I think you just need to get your microphone. I think it's going against your, it's making some noise. Sorry. Okay, Sunday, what was leading negotiating from, who was leading negotiation from your side? And since this was your first deal, how did you prepare the negotiations? Did you get any support from intermediaries? How did you enter?
Thank you, Christian. So I have two other co-founders. One who is the current CEO, Carl Jensen, and the other one who is also our board chair person, and she's based in the US. Her name is Kellen. I'm of the three of us, I'm the least financing person. I'm more of the people.
Oh, sorry, Sunday. I think we lost you there.
Person, so they really tackle a lot. Of course, it's team effort, and I'll tell you, I think we've got a good finance team beyond those two. We've got two other Zambian guys that are really good at their finance etiquette, and those really helped us in that. And they were really the first when it comes to most of the deeper conversations when it comes to that. They're talking about the deal. Messi mentioned about justifying, your sort of your valuation, and it's not as easy. When you're an African company, especially based in Zambia, looking at small-scale farmers, there's not so much to compare in as much as it feels like it's a bucket. So we had a lot of back and forth in that sense. Who helped us to sort of get there? Like I said, I think previous to the prior to the raise itself, we had been working with sort of advisors, and I mentioned open capital advisors for an earlier raise, and also we had gotten some sort of pro bono advisory from one of the firms in Zambia, but orchestrated by Prospero. So that was that. But for most of the journey into the actual work I think we got a lot of internal help. So like I mentioned, the team is quite ready, and they really came in and helped where they could. So we have a bit of that. So we didn't get a lot of external help, except for reference purposes and a bit of advice here and there inside the raise. So I think that's pretty much it from that front.
Maybe just a quick question to you, Simonta. Does Bongo High provide any form of capacity building when it comes to due diligence and how to do these kind of negotiations? Is that part of the curriculum that you offer your clients?
In our investor readiness program, we provide an introductory stage. We introduce a lot of startups to the early stages of what investors would be looking for. And we do this by not only taking them through a structured learning process in which introduces them to not only the stages or the documentation they need to prepare, but there's financials, what they need to put in the deal room, minutes with regards to governance, how they actually run board meetings and things like that, but also inviting other partners, including investors, to come in and participate as coaches, mentors, so that they can transfer some of that experience and knowledge that they have from experience directly towards the companies.
Mm-hmm. Okay, great. Thanks a lot. Mercy, since Goodwill is operating out of South Africa, did you work with any local consultants to help you with the due diligence preparation?
Not at all. I think we have a very robust internal capacity, and also because I'm Zambian, I already understand, the dynamics of the market, etc. We have experience with making agriculture investments. This was not our first agriculture investment. We did not leverage on any external consultants. We do in situations where we feel we cannot, we do not have the internal experience when making a particular deal, for example, in a brand new sector. But in agriculture, this was not our first investment, so everything was internally done. Okay,
thanks. And Sunday, what was the process like, and how stressful was it to be subjected to all of these due diligence interrogations?
Yeah, that's a good one. To be honest with you, I think we had opened up our learning tentacles and just trying to get as much out of the process as possible. As you may know, I think last year hit us with a bit of COVID and a few other, internal sort of economical issues as a country. So that didn't really sit well with the whole investment process. It took a bit longer, but it was okay. So, but the other thing, like I said, I think it's always important to find the kind of investor that understands you. And in this case for Goodwill, they really came in as a blessing, honestly, because they understood the climate, they understood the situation on hand. So the process itself was much easy. Of course, we would have wanted it, for example, to be accelerated in one way or the other, but they came through, and we see a lot for us, I think, in the future with them. All in all, we learned a lot, and we would be looking forward to sort of using our learnings into our next race.
Okay, thanks a lot. Okay, so final stages here. So back to you again, Sunday. What were the biggest hurdles and obstacles in reaching a consensus on a final price and a term sheet? If you can be very briefly, because we are running a little bit out of time. So.
Yeah, I won't review much there, but like I said, I think it all borders back to sort of the valuation and justifying that, and making sure that we're getting the better part of the deal. On top of this is really understanding the terms given, and there's a lot of back and forth in there. I think it pays to sort of have a team that can help you review, not only yourselves as entrepreneurs. So we had a good advisory team in the background, also people that have previously sort of invested. And then it also pays to make sure that you have a team internally who are also ready to understand what you're planning for the future, and also ready to answer some of the questions. So there are a lot of fine lines that need your eyes. You need a lot of patience to understand what you're getting into, And in one way, it's quite exciting. I would use the word addictive, because you want to raise over, but it's an exciting process. And I think you just really have to get all your ducks in the row and make sure that you close the deal. So yeah, I think the major hurdles was that time to understand the whole paperwork, to justify the sort of the valuation, the whole of that process. But all in all, it closes and you have great partners.
Okay, thanks a lot. Mercy, Sunday, he mentioned there was a lot of back and forth. So did Goodwill have to make any adjustment to your final price offer based on your due diligence findings?
Absolutely. I think we had, not after the due diligence, I mean, the due diligence does feed into the evaluation, but we were, I think, quite satisfied. There was nothing material that we found during our due diligence that, would make us bring everybody back to the table. But I think that the recommendation is to agree on a price earlier on in the due diligence, or at least earlier on in the process, and the key terms, so that it can be smoothed down along the line. And this is what we did. I think we focused our discussions earlier on the price. It was a lot of education on both sides, the back and forth on really justifying and taking each other through, both of us, through why we were presenting this offer and why there was a counter offer, etc. So I would definitely recommend that those conversations come earlier on in the process. I think Good Nature Agro did extremely well, and we found that when it came to the final negotiations during legal transaction documents, it went over pretty swift because we had already taken care of the major or material parts of the deal.
Okay. And the last two questions, Mercy, did you use any local Zambian law firms or lawyers to help you with the drafting and the signing of the share purchase agreement and the shareholder agreement?
Yes, we did. So we actually used, and this is also another strong recommendation for investors, is definitely find a good lawyer that understands what's going on. I think we've had plenty of experiences with lawyers across the continent, some good, some bad, but we had great lawyers this time. Because of the structure of the organization, we worked with 3 sets of lawyers, but yes, a Zambian lawyer to do the legal due diligence on the company. So in addition to our due diligence, during document closing or during the closing process, as we like to say, we get external parties to conduct, financial and tax due diligence, etc., and then legal due diligence. So we did work with Zambian lawyers for that.
Yeah, and the same question to you, Sunday, and the fact that you're based out in Chipata in Eastern Province, which is, I recall from Unique's trip last year, was 7-8 hours by car. Did you use a law firm based in Chipata, the same lawyers as Goodwill, or a law firm based in Lusaka?
So we used a Zambian law firm based in Lusaka, but we did not use any Chipata law firms. I think Chipata is still growing that kind of reputation for now. Yeah, and like Messi said, I think in everything you have to really take the time to understand the lawyers, and if you're selecting lawyers to represent you, really have to get people that understand what they're doing. So it pays to take your time to just understand that, especially if you are younger entrepreneurs, so naive about getting things done, you might get yourself into a few sets of legal issues. So you really have to take care of that. Lucky enough, we did not have any of those issues, but we were late because we referred to a lot of other entrepreneurs and networks that were working with law firms, and they referred those to us.
Okay, thanks a lot, Sunday. And the last question to Mercy. How long did it take from the final deal closing signature to the actual payment? How long does an entrepreneur have to wait before he starts seeing the money flowing into his account?
2 weeks, within 2 weeks, actually, some even 1 week. It needs to, as soon as the signature is there, you have an obligation to disperse the money. So
okay. So I'm sure that's very reassuring to many of Unique's members of the. And to you, Sunday, how long did the whole process take from your first pitch to the final deal closing? And what could you have done differently to have closed the deal faster? I uploaded on the chat on the event site a video that Carl he did in 2018 So I'm just wondering, how long did it take from the first pitch you did to the signing of the deal?
I think Messi, you have to help me with this one. I think it took us close to about COVID inclusive, and like I said, a few other economic issues, but it was about 7 months, I think.
Yeah, 7 to 8 months.
7 to 8 months.
Okay, perfect. Thanks a lot. In interest of time, we're gonna skip the discussion and question. We'll get to that after the second part. And I will hand over to my colleague, Hagai Chumba, to lead us through the second part of panel discussion. Over to you, Hagai.
Thanks, Christian, and good evening, everyone. Can you hear me?
Yeah.
Good evening, everyone.
Okay, great. So I'll try to be quick, looking at just line of our time. My name is Hagai Chumba. Let's see if I can turn on my video. All right, great. My name is Hagai Chumba, and I'm the program manager for the National Advisory Board for Impact Investment, which is a non-profit organization established under the oversight of the Global Steering Group for Impact Investment, with a goal of spearheading global impact investment ecosystem, in our context, Zambia impact investment ecosystem. So working with various players within the ecosystem, from the supply side, which are investors, to the demand side, which are social enterprises. The key thing that we've seen over the past few years is that there's considerable interest and around impact investment, both in not only in developing countries but also in developed countries. But there's little data available to sort of guide businesses, policymakers, as well as social enterprises in terms of how do they strengthen the impact investment ecosystem or attract impact finance, as well as build impact economies. So attracting impact investment, generally from our experience, we found that it really depends on many things. One of which is raising impact investment awareness around existing opportunities, and also changing the investor perception and building a commitment to impact investment. And this is one of the key areas that the National Advisory Board launched later last year, an impact survey, which just aims to collect information from fund managers and also asset managers about how they perceive Zambia as an impact investment location, both from the context of awareness of impact investment opportunities, but also to the commitment and also to the perception. So in this discussion, I would like to just ask a few questions to the panelists, Sande, Messi, and Simunza, just in a more broad sense, in the ecosystem level, in terms of, and these are some of the questions that we've been asking our investors in our survey, about how you see Zambia as an impact investment location, and also outlook for Zambia as an impact investment location for impact investors. So maybe the first question will go to Sande, and speaks to COVID. I think you mentioned a little bit earlier in your answer that I mean, COVID has disrupted a lot of things generally, and investment space across geographies, and Africa is no different. The reports so far, I was reading some few reports over the past few weeks, which estimates that impact investment flow to Africa might have to decrease estimate of last year. But also we're seeing a lot of interest, agency around governments in terms of how do we support and impact-led recovery. How has COVID-19 impacted your organization or the sector as a whole as it relates to challenges and opportunities?
Sounds good. Thank you so much, Hagai, for that question. So COVID-19 in its entirety, I think, speaking from the last conversation, it just slowed down a bit of like our investment process. So you could sort of count that as one challenge. I don't know how widespread it is with other startups, or should I say other businesses that are looking at raising. So that's one. But in the sense of the sector itself, COVID-19 has not really impacted much of the agriculture sector in a big way. I guess it's boiling down to sort of the human capital, how it affects people, the actual farmers who are producing. And I think there's no conclusive paperwork on that or documentation on that that's proving that in our sector, the current. But one thing that's obvious is that people have to eat, and agriculture is basically at the forefront of making sure people have the food to eat. So it slowed down, for example, last year, certain aspects of the normal agricultural calendar, like purchasing was slowed down in our business case. We could not have groups of farmers, for example, selling their crop at a go because we did not want to have any form of sort of spread of the disease. So we followed the guidelines, and that took twice as long to get the farmers paid on time, to get the farmers to deliver their crop on time as well. The same thing is affected on things like logistics. But a good thing about all this is that it has also introduced a few other advantages, like the use of technology and sort of the earlier interaction with farmers into the field, so that we can capture data as early as possible. On the company itself, for example, we have had to change the way we operate in our day-to-day operations. We don't have 100% of our employees that work on a given day, but we've reduced that to 40%, and it rotates around the schedule. So most of the work is done home, but that's only for office-based employees, and then everybody else in the field, we just lessened the way they interact, and basically they're mostly sort of innovating around extension, making sure that they can reach small groups of farmers, capture as much data and lessons to spread with the wider group, and using platforms like WhatsApp and also a few other platforms to sort of share their learning. So for example, if they find a problem in the field, they can share it over the platform instead of bringing the farmers to one place. So in a way, it's really been a challenge, and in another way, it's also inspiring innovation to sort of see how we can better the process of operation. So that's about it.
All right, thank you. That's great. Messi, probably you could speak to this. The National Advisory Board has done some kind of mapping studies and sizing the markets in Zambia for over the past few years. And what we found that there existed gaps within the market when it comes to attracting impact investment for businesses. What do you think are the existing gaps, or on a broader scale, in terms of existing in the impact investment space when it comes to businesses attracting investment from impact investors?
Okay, thanks, Haggai. It's more like a chicken and egg situation. I guess it would be the two that I can think of that are quite influential, big is, first one is catalyzing more capital. So investors like to feel comfort that they're not going in alone, and so other people are investing. So the investor base in Zambia, I think previously has been quite small, but it's growing. Over the last couple of years, there has been more money flowing to the market, and particularly in the early stage segment. I think more private equity or more later stage businesses have attracted capital from DFIs, et cetera, in the past. But the early stage ones, looking at ticket sizes, like I said, $1 million and below, et cetera, have really been starved of capital. So one thing that investors want comforters is they go in when their friends go in. So really expanding that base is very important, which I think is already happening. That's the good news. The second is, and maybe this is more Simunza's side to speak to, but one thing that I think the market also struggles with, and when it comes to investment readiness, is I think more affordable support services for companies. Even, I was talking about the three sets of lawyers that we used, even as an impact investment firm, that's quite expensive. And you're always wrangling with lawyers about expenses. I can only imagine what a startup, that doesn't have enough money goes through when trying to get proper legal support or proper financial support, which is a requirement as it speaks to the investor readiness. So those type of support services within the ecosystem, I think affordable support services from people who know what they're doing, who can be able to service startups, rent a CFO for a day, or, get affordable legal support in order to get you ready for an investor to invest in you is important. So catalyzing more capital, expanding that investor base, and those very important support services that are required to get you ready to receive funding.
Great. Simonza, you are in this space, in tech and innovation space, and would you want to add some to what Messia just said when it comes to intervention that help overcome obstacles when it comes to capturing impact investment?
I think Mercy has nailed it right on the head. I think a climate that exists, that one has the right policy frameworks that allow startups to innovate and test new ideas before seeking out whether or not they can grow is the first thing that needs to happen in an environment where you hope to do this. And I think whilst people, sometimes people tend to forget, and I know that I'm preaching to the choir here, of people that are practicing impact, people who practice impact or environmental concerns with regards to how the businesses are structured. But it's sometimes people tend to forget that the business model still needs to make sense at the very end of the day, if it's going to be able to attract capital from an investor. So whilst it's great to have the impact, the business model still needs to make it. And once you get those two matching correctly, like Mercia said, then it's a regulatory framework that allows them to be able to grow, and then allows in which an investor can see that growth of a business in this area will not be a problem. So agriculture have served well in that. Energy is a great climate, for example, in Zambia, where regulations exist for investment within those sectors and policies for growth. With those sectors. You could say the same as well for fintechs. We just finished 2 cohorts with fintech entrepreneurs, and Zambia continues to serve the regulators from the capital market side and the central bank are very, very keen, and participated in the program with regards to making sure that the enterprises in that program understand what they need to do, understand the basics they need to know for not only for registration, but operations within that and scale out within the sector. And they were getting this first hand from the regulator, meaning that the regulator themselves was keen on the growth of new solutions within that sector. When it comes to getting partners to support the enterprises, we found that we continue to reach out to the goodwill of local industry players who can then come sometimes, and we understand that professional services do indeed cost quite a bit for them to be able to earn. So advisory services from partners sometimes does help, but they only help up to a certain extent, and getting an affordable service so that when beneficiation or commercialization of the process then comes into play, there we hope that can then also be passed on well to the entrepreneurs so that they can get advantage of that and accelerate towards a close when it comes to them partnering with the companies. Was that we continue to seek ways in which we can either pass on benefits towards the entrepreneurs or continue to guide them towards the correct matching and growth in those enterprises. And I'll still remain open to any partners that would like to work with us in making sure that this can happen. Because Zambia is a great climate. We remain confident that Zambia continues to present a great place for social enterprises to grow from, whether it's you're talking from a market opportunity point, growing population, stable political climate, neighboring countries around here that you can open yourselves up to, ease of doing business within the country, and many other opportunities that we think that are being slept on at the moment.
Yeah, absolutely. Maybe just to build up on that, you are working with various sort of businesses, social enterprises, providing innovative solutions to address some of the key environmental and social challenges we're experiencing today. Over the past few years, let's say 3, 4, 5 years, what are some of the major developments that you've seen in the space that speaks to market growth?
We've seen, so we are largely a tech hub, so we've seen the penetration of technology within the country continue to increase. And what this allows for is it allows for an end point, more devices in people's hands, meaning that technology can start to play a part within accelerating delivery of services towards the population and the market if you meet the right people that you want. And this is not only from a consumer point of view, but also from business to business point of view. So this means that business can now be conducted online, and within their processes can then be accelerated, made more transparent, and allow for transactions to then take place through the use of this technology. And that has worked well as a benefit towards that. I've alluded towards the continuing population growth. Zambia continues to work on a healthy trajectory. There's still a lot of work to be done with regards to delivery of certain services, health, education, and other services within those areas. But we are bullish on the fact that the growth of penetration of technology can then be used as a catalyst towards making sure that these services then get delivered to the endpoint, and also at price points that can be afforded. If we can get, for example, the work that a company like Good Nature's Agro is doing, making sure that it can work with farmers, it can scale out by working with farmers, then we know that farmers are earning a revenue, and then other services can be delivered towards at those endpoints. And a circumstance that we grew up in years ago, where wherever you were from within Zambia, you had to travel from the end of Zambia to get to a good school within Lusaka or other provincial capitals. Why can't we take education to the endpoints of Zambia and use technology to be able to make do of that? And if farmers are earning a revenue, they'll be able to afford to pay for good education for their services. And we can do this along various other. We can draw out this play along various other services across the country. And then, given the great relationships that we have with the countries around us, is that it then gives you opportunity for expansion into the region.
All right. Yeah, maybe just to conclude, Messi, your geographic focus in terms of investment is covering many countries, Zambia in particular. How do you see in terms of attractiveness? How is Zambia in terms of attractiveness as an impact investment location is compared to other countries, maybe both in absolute or comparative terms?
I feel like Munza really answered this question very well, and just riding on what he said, it's extremely attractive, which is why we've invested. It's politically stable, the business environment is good, there's a skilled workforce, there's a growing, vibrant ecosystem. And this is also further validated by, capital flowing into the country. I think there were about 5 or 6 deals last year that I counted, early stage deals, transactions that took place in the country. There's a rising population, even as a market, there's a rising population in terms of population growth, of people willing to spend money at the emerging middle class. It has all the recipes ready for to pump into the ecosystem. So we see it as an extremely attractive destination. We don't even like to talk about challenges, because as an investor, you always take calculated risks, and the risks in Zambia are not unique. These are the same type of challenges or risks you see across the continent. It's all about being comfortable in managing those risks and moving in. So as a market, very attractive, very, very attractive.
All right, thank you very much, everyone. I think that's where we end for this session. Just to give a short notice that we've been asking similar questions, particularly to fund managers and various impact investors. So if you haven't received the link for the impact investment survey, I'll drop my email in the chat box if you're interested in participating and for the interest of Focus on Africa there. It will be worth taking. And we're also giving out a pair of tickets. We are giving out a pair of tickets for the next Global Summit, which will be out sometime in October, as a form of appreciation for your participation. Thank you very much. Back to you, Christian.
Thanks a lot, Haggai. I know we are running out of time, but maybe you want to just continue, if the panelists will allow us 5 more minutes, Haggai. Maybe you can take a few questions from the many participants who are still with us.
Yeah, sure. You can open the floor. If we have got anyone within the group, thank you so much for your time. I think your persistence is worth praising. If you have any questions on what we've been discussing, either the first part or the second part, you are able to unmute yourself and ask the panelists. Thank you. All right, I'm just checking here. Okay, I'm just seeing messages, Christian, in the chat box. Just people saying a question.
I think Tiffany has a question.
Hey guys. Yeah, I mean, I've met most of you. Obviously, most of you are very familiar with my colleagues, Deb and Emma. Fascinating discussion, and obviously it plays a lot into what we do because we work more on the growth stage, and of course we work with Good Nature. And sometimes we've chatted before, but I was just really interested in what you guys were saying about the professional services. Obviously at growth stage, it's slightly more likely that it's a more absorbable cost for the SME, but as we all know, most of the time the reason they're looking for funding is because money's hard to come by. I'm just wondering about a large portion of what we do is to help SMEs understand their investment readiness gaps so that they can remedy some of them themselves. But obviously, from professional services are going to be required. They're going to have to tap in at some point. And so my question was about whether or not you think it has helped shape the scope of external professional services and reduce the man hours. I mean, I was even having a conversation with WCAP this morning around governance costs. And, you know, without donor funding, they're not virtually inaccessible, but I was talking about if you have a very targeted scope, you can reduce your man days, which reduces your costs. So just from your experience, because it's definitely been ours, a lot of the time SMEs don't know what they don't know. And they do have the skills and capability, just maybe not always the time to address it. But have you seen a reduction in the scope and associated cost as a result of the investment readiness courses you've run?
All right, yeah. So our experience has been that the earlier, just like you have well explained, is that companies at the early stage definitely need more help than those at the growth stage. Not only from the fact that those from the growth stage might be able to afford them, but also from the fact that this is a stage when, especially when they're just starting off, this is a stage when they usually don't know what it is they need to put in place that would be required from them to then make a convincing case towards an investor. Or in that case, as they're negotiating, what are the things that they need. So a good education helps them to understand that. A good education then helps them to get through answering some of those questions correctly, or putting that plan in place and then saying this is what we need to put forth, so that by the time they get to a place where now they start to bring things, they start to bring in the professional services. Hopefully, part of that work has been done on their end, and what is actually happening is just the final financing of the information that can be presented to them. And entrepreneur support organizations, whether they're incubators, accelerators, investment readiness programs, or other providers, would do well to then provide that support if they can do that. With over 630 entrepreneur support organizations on the continent, what you're going to find is the level of expertise that exists within the organizations, the level of finance capability of the organizations to provide these services at an affordable rate or for free pro bono towards the startups in their cohorts or portfolios will vary very significantly. And this is where partnerships also lend themselves significantly towards the company. So, for example, at Bongo Hive, what we've been able to do is we're fortunate, for example, that we work with a great law firm that offers pro bono office hours to the companies, and if the companies know what questions they should be asking, what information they need to seek within the period that they are in the program, they can take advantage of that and then make sure that either documentation and certain things that they would normally pay a top-tier law firm for, they can gain that advantage and put that in place. We do offer help with financial modeling and working alongside our accountants during the period that they are in those they are in our programs. So then that also takes them to a certain place of them getting to know and understand. We understand that a lot of early stage business owners are operators. They know how to build the product. They want to take the product to market. They very rarely will have gone to study accounting themselves or what the legal terminologies would be themselves. But what they really, really are passionate about is taking a product into market. So supporting them in that case would be them. A good team would be one that they would go and find somebody who then complements them with on the financial side. Bringing in somebody on the board side who can advise them on the legal side is another way of them being able to mitigate some of those costs that could come in at that stage. Yeah.
Okay. Thanks, Monza. I think we've got a hand from Calvin Stangara. You can,
yes,
if you can be brief and concise.
Okay, thank you, Haggai. I think my question might be angled towards Mercy. Thank you for sharing about this deal. I reckon it might be great to even have like a case study just to get an appreciation from all angles. I think I was just curious to find out how the security cover was structured around this deal. Maybe because I just Googled Good Nature Agro. I was also getting an appreciation of the business model. So I just had a few curiosities around it. I don't know if I've missed it.
Okay, thank you, Calvin. I'm going to ask a question, just a clarity. What do you mean by security cover?
Okay. In terms of course, did the investment require any form of like collateral or anything of that nature?
Okay. No. Collateral is debt, on the debt side. So if you're getting debt, and again, looking at impact investing and looking at even on the, I think it's a very strange request for early stage startups seeking debt from impact investors who ask for collateral. So if you're an entrepreneur listening to this, please, that's not the investor for you. So with equity, there's no collateral. With impact debt providers that we work with, that we've interacted with this in the system, there's also no collateral. And they're more flexible terms because of the nature of the sector. They want the business to grow. So I think a short answer to your question is no collateral. None whatsoever.
All right, thanks. I've seen another question in the chat box from James. It's an open question where the impact being an important objective of investment, how structured is the process of impact evaluation, and is it usually a process unique to an investor or based on industry adopted methodologies? Mercy, would you want first to have a go at that?
Sure, I can jump at it. So no, I think with impact measurements management on the continent right now, actually globally, there's no consensus on standards. There are frameworks that everybody pulls from, like Smart Campaign, UNPRI, the GIN, etc. But every investor customizes or tailor makes that to their mandate, what they're looking for, etc. And they define kind of those parameters. When it comes to early stage, so the first half of your question, when you look at later stage companies, you can include the impact, outcomes or impact into your valuation discussions using your social return on impact that leverages on, DCF, etc. And then you can tie that into pricing your startup or negotiating based on that. On the early stage investments, which is where we play, it's very difficult to connect the dollar amount of your investment to a specific outcome. It becomes very murky and very tricky. And so for that case, we don't do that. We don't necessarily tie, impact outcomes to pricing our valuation. But it does form, just on that point, sorry, James, thank you. It does form part of the assessment, because when we are presenting the case to our investment committee, because we are an impact investment fund, we need to also demonstrate that this company, in terms of their track record, has and is contributing to social impact. And there are ways, again, using IRIS and GIN, that KPIs that you can use to demonstrate that. But feeding into pricing, no.
Okay, that's great. Very helpful. Thank you very much.
All right, thank you, everyone. I don't think we've got more questions, and we've just run out of our time. We will end here for today. Thank you, everyone, for participating. I'll hand over to Christian or Simone, just to give a few announcements about our next Impact Investor Circle, and just to give you details about what's coming ahead. Thank you.
Yes, of course.
Simone, are you
here? Thank you. I will start by thanking you all for participating. And now, while introducing the next event, I would like to focus a bit on Zambia challenges. So here in Zambia, there's an increasing number of companies that are not investment ready, even if they're looking at solving societal and environmental challenges. And there is quite a big lack of local impact investors and of intermediaries as well. This is much of a problem. This is a big problem because it tends to create high transaction costs for foreign impact investors, and these costs will translate into different preferences. And the preferences I'm stating are preferences for higher investment amounts that in turn can create a mismatch with demand, because investment amounts needed are much lower. And we also have to notice that investors that are looking for big ticket investments are much constrained on the amount of capital they can supply. So Zambia lacks investment opportunities for big scale capital. And this is a big issue, as well as a lack of transparency between SMEs and investors. And Zambia presents an underdeveloped market, because this issue can increase the risk perception of the Zambian impact market, and it tends to create barrier to investments, also due to the lack of knowledge of asset classes and ESG. And the supply of impact capital in Zambia is growing and can complement public spending and official development assistance by utilizing private sector capital and skills to reduce the vulnerability of Zambia's economy to external shocks, and as well as addressing socioeconomic needs. Impact investors in sub-Saharan Africa controls a total of $22 billion in assets under management. And since 2015, suppliers of impact capital have committed to almost $1 billion. Actually, it was $969 million to Zambia through external transaction. So these suppliers are both private investors and DFIs, or development finance institutions, where 158 development finance institutions and impact investors have been shortlisted. So actually, given commercial banks' inability to support the impact sector, we have decided that next month we will take a closer look at the important role that DFIs play in the impact investing ecosystem in general, and in supporting Zambia's emerging entrepreneurial base in particular. And this will be done with a particular focus on two multilateral DFIs, that are the African Development Bank or AFDB, and the IFC from the World Bank Group. And we will also have two bilateral European-based DFIs that are the CDC Group and the Danish government's investment fund for developing countries. That is also known as the IFU. So, okay, for the last slide, we once again would like to thank you for your participation today. And we want to remind you that the event will shortly be uploaded on 4AP Group, as well as IPA and also Bongo Hive's YouTube channels, for those of you who wish to watch the presentation again. And please do share the presentation and the event with your impact investor network if you found it interesting and sharing worth it. Should you wish to further engage with the organizers or the panelists, please do reach out directly to us using the contact details above, or the contact details that you can see on the slide. And all that remains to say is to wish you a happy, healthy, and successful time until we meet again next time. And see you soon.